Hey folks, it's Simon here with your Tao Daily video for Friday the 31st of May 2024. Happy Friday to you. Let's start by taking a quick look at the NASDAQ. So the NASDAQ here clearly in an uptrend. Okay, we've got made a higher high, and it remains to be seen now as whether we make a higher low here in this little campaign. Now I've drawn a little horizontal line here at the previous all-time high. Price is still above that level. You could expect that level to come in and potentially act as support here. So looking at the NASDAQ, no real issues. This still looks bullish. However, in yesterday's video, we talked about market breadth, and what I want to do today is talk about market breadth, but in a slightly more granular fashion. So, yep, the NASDAQ looks good, but there are some canaries in the coal mine. Let's have a quick look at Adobe. All right, that chart looks awful. Adobe was down over 6% on Thursday, and that is in a pretty serious downtrend. Let's have a look at CRM, Salesforce. So they reported earnings Wednesday after market, and yesterday, Thursday, stocks down 20%. This is a technical pattern called the gap and crap. That's the technical name for it. Very unhealthy. And so then if we look at some leading sectors within the NASDAQ, so IGV, that's the ETF that tracks the software sector. This is now closing below its 200-day moving average. It looks like it's transitioning from a long-term uptrend potentially to a downtrend here. It was down 6% almost, which is a big move for a big sector. If we have a look at cybersecurity, you know, that's not below its 200, but that's not a bullish chart. Okay, that's certainly lower highs and lower lows. If we have a look at cloud computing, that has breached its 200-day and looks to be in free fall. All right, so that is a bearish-looking chart as well. So even though the NASDAQ looks okay, all is not well beneath the surface. And just as a reminder, it's basically the Magnificent Seven stocks that are providing all of the upside. We looked at this yesterday. This is still within a whisker of all-time highs. Now let's jump back and have a look at the S&P 500. So I said last week when this bearish key reversal candle formed, we need to wait and see whether the market closes above the high or below the low of that candle. Now, we've closed below the low of that candle, which has certainly got some bearish implications for the S&P here. But remember, we've got PCE today, all right? And when you've got a binary risk event, all the technical analysis in the world can fall well short or even lead you up the wrong direction if news breaks in the other way. What I mean by that is if we get a cooler than expected PCE report, the market will probably react to that favorably, and we could see the S&P start shooting higher again. That's because a cooler than expected PCE report would enable the market to bring forward rate cut expectations from the Fed. Of course, a hotter than expected PCE report, the market would probably react quite negatively to, and we could see this sell-off accelerate. But regardless of how that PCE cookie crumbles today, it does look to me like the NASDAQ is skating on thin ice here. That's a wrap for today. I hope it helps, and I wish you a wonderful weekend.